I got a caller. Got Mike from Dallas, Texas, right here. What's going on, Mike?
How are you doing, Daryl? Listen, I got into an Iron Condor this morning,
Okay.
and I did a 12 o'clock expiration. And just quickly, I did a 41.30 to 41.40, and I went long on that. And then the 41.40 to 41.50, I went short.
Okay.
Now, question: do you do Iron Condors in a shorter time frame, or do you like to go to the dailies?
The only time I'll do them in a short time frame, I usually do dailies on indices. Okay.
Correct. And I did this on NASDAQ. I'm sorry.
Right. So yeah, exactly. So I knew by the price there. You got Nasdaq. So usually I'm doing dailies on indices. I do a lot of shorter time frame ones, or 7 hour, 2 hour, on FX around news because I have a lot of historical stats to back me up.
Okay.
And then on the indices, when I go shorter time frame, I'm gonna have to look at expected range and see what the expected range is to see if it's a good price or not.
Okay.
I'm gonna see if it's wrapped around like an ice level or a deviation level.
Okay.
Because if I don't see any kind of oscillation happening, I mean we had some great oscillation this morning on Nasdaq, but like I'm gonna and hopefully that's what you're basing that off of. We had that awesome oscillation going on, so it's like, hey, I'm gonna go in and take advantage of this, and
well,
so,
I did that. I used the deviation levels, and I used taking 50% of the deviation on each level, and then 50% of that, and they have worked extremely well. I didn't. I'm not going to get into another tax bracket. I made $20.17 on one, and $100 on the other, but it gave me an opportunity to see exactly, how the numbers work on a.
It gives you a nice wide range, doesn't it?
Pardon me?
I said it can give you a pretty nice wide range.
Yeah.
So, I mean, we were oscillating this morning, so I completely can see why you had it there. I mean, we had ice levels, like I said, you had the 0.5 deviation levels. We had institutional zones that was bouncing back and forth between them. It started to run away right there at the end at 12 o'clock. It started to break down, but that's when yours expired, so that worked out well. And
so anyway, but I just wanted to tell you thank you, and I appreciate all your education.
You bet, yeah. And my biggest tip on you is just make sure that you do see that oscillation around an important level.
Yes.
So because that's when the markets are going to go flat, they're going to go flat right around one of those levels. Like I said, an ice volume zone level or a deviation level. And so when you see them starting to oscillate on that, that's when you want to hop in on them. And depending upon how much you brought in, I mean, you brought in what, $120 on it?
Yeah.
So it sounds like. So I mean, don't be afraid to give up some of that and get some cheap, out of the money binaries, even if you're close to expiration, because that thing can just run on you. So
I tried that, Daryl, and by the time I got to looking at the binaries, they were very expensive.
Well, they're always expensive when you get in. You get in on the oscillation. So what I do is I pick my binary contract based on my break-even levels or a little further, okay? And then I set a working order, and I let the market fill it with either time decay or oscillation. And I usually get one filled like easily, and then another one usually eventually gets filled, and then you're really relaxing. That's when you turn, a trade that can make $200 or whatever, and lose, maybe 100 or something into a trade that can make $200 and lose, 20.
Exactly.
So, but yeah, so it's not like I hop in and I'm able to get those binaries on like as soon as I get in the Iron Condor. I just put in the working order and I let the market oscillate and time pass, and eventually they get filled. Hopefully.
Okay. Well, I waited too long, and I was so excited about what I did, and then I went ahead and looked over at the binaries, and I thought, my gosh, these are $40 or $50, a piece.
Yeah, well, make sure you're looking down where the break-even is, and if you're trying to look for the one to buy when the market's swinging up, it's going to be expensive. If you're trying to look for the one to sell when the market's swinging down, it's going to be expensive. That's why I just go in and I find those areas, I find those strikes, and I put in the prices. If I don't get filled, I don't get filled.
Sure.
But at least I got them on there, and I mean, every once in a while it really pays off. I mean, I had one last week I put on that really went against me, but I only lost like $200. It was a $2,000 profit potential trade, And I had like $1,000 risk on, but since the binaries were on, I made $800 on the binaries, and it, brought my loss down to only $200. So, made that back in a single trade easily. So just check out, start playing with that, at least demo, with those binaries and see how that works out for you.
Okay, Daryl. Well, thank you for your time this morning.
You bet. Thanks for calling in. Always good.
Bye-bye.
Awesome. So that's Mike doing Iron Condors this morning, and what a morning to do them. So, like I said, just look at that flat market just bouncing back and forth, and really setting up for, a solid, good trade right there. And worked out well. So anytime I can see it, bouncing between levels and oscillating around a level, like I said, a deviation level, point of control level, an ice level, and I got ice zones just back to back, buy zones, sell zones, institutional zones, back and forth, then I'm going to look for, taking some premium there and maybe even doing an Iron Condor on that. I could leg into it. I could get into both sides at the same time. But if I really expect it to be oscillating, I could buy one when it bounces off the lower level, and I could sell one when it bounces off the upper. And that way I get even wider and I get even more money and a little bit better trade there. So there's a couple ways to put them together, but hopefully y'all can, pick some of those pieces up and implement it into your own trading. Oil today, not really one that you want to do an Iron Condor on. That one was not bouncing too much at all. So it flew on up, it came down, tried to do a little bounce, and then broke right back through it. Had a decent little short over here, so not a big money maker, but trade worked out okay. And then it turned back around, and we got a nice short right there about 10:45, and market flew on down, and coming off that one deviation level, pushing on back down, it came on down, and grabbed a solid 50, 60 cents on the trade, and so started to try to bounce up a little bit, and didn't have basically the confirmation it needed to take that trade. Turned back around, went on south, and kept going, and finally got a short signal right here, and it's about a break even right now as far as moving your stop on that trade if you're short, and sort of sitting right under point of control and lower ice. So we'll see if it has what it needs, or if that was just going to be pretty much a wash trade for us. And we'll take it step by step and see. Stay there. We'll be back. Check out the other markets and see what kind of setups we might be able to come up with. Stay right there. All righty, folks. Welcome on back here to the Diagnostic Trading Hour. And checking out the NASDAQ. It's oscillating around. It did come down. It pretty much hit off that 0.7 deviation, started bouncing on back up, but not with enough strength yet to be ready to dive into it. So don't quite have the trade that I'd like to have before I hop in. So I'm going to sit back and wait a little bit. Like I said, haven't got all my signals lining up. I like to see my trend catch a green. I like to see my trend flip green. I like to see my trend bends green. And, of course, I'm coming off that I zone level right there. So we need just everything lining up. We don't quite have all the pieces together. And one of the biggest mistakes I see traders make that I've made myself way too many times, and after it hurts enough, you decide to stop doing it, is hopping in and trying to, force a trade. So try to make those trades happen. And let's see here. I got one more thing I need to check out. Okay, hold on. And what is this? All right, got one. Let me pull this chart up over here. Okay. We're back and checking things out. All right, well, let's go ahead and check out the top news story so far. I'm not seeing the trade set up, so I don't want to overly focus on that and try to force one. But we got a few things that we can go over. And let's see. All right. So, EIA reporting 98 billion cubic feet climb in natural gas supplies. So, again, but that's not much more than expected. Let's see here. All right, so not much more than expected, so not a big news story there, and I'm handling like 12 things at once going on in. And Wall Street, beginning October on a weak note. We talked about how, we got 3 bad quarters coming on in. And so pretty hard to note. Euro stocks 600 also erasing gains. Wall Street having a weak note. Markets being down. All the indices down, down, down. And what else we got? We have, let's see, what do we got? We're looking over at proximities right now. Let's see. So that's no big surprise there. And let's go in. U.S. dollar is near $96. And so slumping on down. U.S. dollar moving down. Let's see. Got Wall Street going down. Apple shares falling on down as well. So, of course, pulling a lot of different things down with it. And we had the weekly jobless claims went on up. So China activity falling, even though China is on vacation, they still do have those news releases coming on. Going on into the ISM manufacturing, it's the weakest we've had since the 2013. Basically a complete collapse in new orders. So people are not placing orders. There's not a lot of confidence. And if it breaks on back below this, that's a very, very bad sign for the economy. And it's basically manufacturers' desire. Right there, you can see this little level right here, support level on ISM. And when it broke below that, 2001, broke below that, 2008. So hopefully we don't break below that again, because that would be very bad for the economy as a whole. So like I said, it measures the weakness of new orders being placed in the manufacturing sector. There's quite a few stories out on that today. 2-year low with weakest employment numbers since June of 2013. So that could be a little, potentially revealing to the numbers coming out tomorrow. And we have, ADP, NFP coming out tomorrow morning. So make sure you're ready and aware for that. It should be a fun bull bear binary hour we'll be watching and seeing if we can find a good setup. So the automakers, on the other hand, had a jump in September sales. So General Motors, Ford Motors, Fiat, Chrysler jumped on up. And, of course, cheap gasoline helps with those big gas guzzling trucks and everything else. And so I'm sure that did help them out. Right there, we'll be back right after this. All right. We'll come on back here to the Diagnostic Trading Hour. We'll get on over at some of the top stories right now. And let's see what we got. Canadian stocks. All right, Canadian stocks. TSX is opening higher as energy stocks are rallying up. But overall, we saw most of the indexes move on down. All right, so let's go back. Let's do a few chart reviews for fun. We'll check them out. We'll see where things are sitting at now, see what we can do with them. And so they did bounce on up. So there it goes. It's taking on off and moving on up there. So really not between a level, not my best setup. Maybe a great trade, but just not my favorite right now. On the NASDAQ, if we go in, let's dive in. Like I said, we looked at oil. Oil's not doing a whole lot for us. Let's look at natural gas, see if there's anything left. In natural gas, we'll pull that up while we're waiting on some of the others. And let me see here. Okay, so I'm pulling that up. It may take just a second for that to load. And while that's going, we can go in. We can look at a few others. We got gold. Gold shutting down here about an hour, but yeah, like I said a little bit earlier in the day, gold is choppy. We got copper shutting down in a few minutes, but it's still in that great downtrend. It's had an awesome downtrend going on right now. And just now busting through one deviation to the downside, also the lower ice level, and hitting off support zone. Definitely be an area where I'd be expecting to have my stops very tight. And right there at 23,028. And potentially probably taking profits soon, if not already, on that trade. All right, so that gives us a copper wrap up. Let's go in and let's see, NASDAQ chopper. We got the NASDAQ one. Let's see if we can find something that's going to be a little bit more to our liking. Let's check out the Russell. And we'll load up a few charts here, see what we can get. And all right, let's see. It takes a few minutes. In the meantime, some other things that we can go through. One thing I wanted to go through, I had not had a chance. I know some of y'all follow along, like to listen and hear about what's going on with my daughter and her rodeo stuff. She did an amazing job this past weekend. She had 3 out of 3 of the jackpot races she was in. She actually was able to win and take home cash checks. So she's an official professional barrel racer at the moment. And she actually got her, that's her little pony one that she rides on, but this is her big fire-breathing dragon beast here. And she is handling him really well and tightening up those barrels, getting faster and faster times. Also doing poles. She's racing for a saddle this weekend. So, and the next weekend. So there's my son, her little brother right there, but her getting that check right there. She's raced in these, what's called Brat Barrel Racing Association of Texas. She's been racing in these races all year, since pretty much like, I guess, May. So she started on them. And so it's the first time she won a check. And so she beat out a couple hundred adults in that process. So that was pretty exciting. And just a gorgeous sunset out there. And let me see, one of my favorite pictures we got of her right there. She's looking at the arena, and she has 2 horses left before her before she goes. She's actually the last runner in this race. And so she has a little motto, which is look, think, and hustle. There's our mantra. And so because when she's going on these horses, you don't have a lot of time to think about the details. So you have to have very short key words in your head. And sort of sounds like trading, right? But look where you're going. Think what you're going to do when you get there. And hustle, hustle, hustle means make it happen. So when when she's darting out of the gate, she looks at the exact point and spot to make a pocket around the barrel. And she goes, okay, once I get to that point, then exactly what am I going to do? Where am I going to be looking? How am I going to be sitting? And, because she has to move her hands and has, everything in the right spot. And get ready for that next turn. And then as soon as she turns around and she's done that, and she's looking at her next point, then what does she need to do then? So she's thinking before she gets to that point, what should I be doing? Okay? So what exactly, like where should my hands be? Where should my feet be? Where should my eyes be? Where should my shoulders be? And she's thinking about all that before she gets there. Because if she thinks about it by the time she gets there, I mean, the horse goes literally in about 3 seconds. He's, running 100 feet. Okay. So you don't have any time once you're there to start making decisions. It's too late. Very similar to trading. You need to look. Where do I think the market is going? What am I going to do when it gets there? And then I need to execute. I have to execute. I got to be on top of it and make it happen. And so, we brought that down to go, 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 which is a lot easier to say than look, think, hustle when you're yelling. But she knows if she hears me saying go, 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 like 3 times in a row, that means look, think, hustle. And I'm just reminding her. And anyways, very focused, very proud of her. She's doing an awesome job. She got her natural little britches. I had to look at that twice. Rodeo Association right there. And so her first professional rodeo belt buckle. And she's picking up her checks and signing her name and turning in her W-4s and all that fun stuff and counting out her money. So letting her horse smell that money. So she had a good time. Anyways, so got her professional numbers for her back and all that. This is her spying on the competition. She's got on top of her horse and looking out. She wants to see exactly what kind of times they're getting, what's going on. Anyway, some fun stuff. Had good times. So going back on over here. So we're looking for, back on the Russell now. But, that's my daughter Felicity. So she's doing really well. And we're just watching her right now. We're actually starting to pick out horses that we want to breed in order to make her future barrel horses now. So it's a lot of fun. We were bidding last night on finding some stud horses to make the next ones over the next several years here. All right, so right here, I mean, we actually had a trade right now. We were talking, of course, we were loading the Russell up. We didn't quite get as clear of a picture over on NASDAQ, but over on the Russell, we got one. We got a long right there. It's trailing up right now. The entry on this trade would have been just above 1083 there. And with a stop right now at about 1083.5 and trailing on up. It is running into a 0.5 deviation, so it's going to have to bust through that to make it. If it does bust through that, where is it going to go? Okay, it's going to go probably on up at least right here. We can see where the oscillation happened right here on the lower end of ICE. So if we move on up to 1089, 1080, actually about 1090, right there, right in that range. If it's able to bust on up through that 0.5 deviation right now, it's going to serve as a resistance, and it's going to have to be able to hit it and turn back around if we're going to take the trade. At the same time, if it doesn't, do we get out of the trade? Yes, and we are going to be looking for what? We're going to be looking for a short setup, okay? And if we get that short setup, what are we going to do? We're going to go short. We're going to have a stop right above the swing high right over here and take this on down. And so hopefully we'll get a nice, good short in that process. So let's see. That gives us Russell, and it gives you some good market analysis on that one. Let's go in. We can look at the DAX as well. DAX is often one of my favorite indices to trade. And if I can get it to load on up for me, computer's taking just a little bit here for some reason. And all right, let's see. Got this. And it is just taking its time. So we have to pull that chart back up in a little bit. All right, well, let's keep on going. We got plenty of stuff we can cover. And okay, so I've got everything cut up on Felicity. We talked about the news. We got the news all ready for you through next Wednesday yesterday. And let's see. One of the things, the implied volatility, we have not went over in a while, looking at the IV readings. One of the things that I saw in one trade group is they're like, hey, we're so popular that they must be changing the pricing of the binaries just because of us, because they're losing too much because of us. And they obviously think very, very highly of themselves. It's implied volatility based. Okay, so they're a probability based trade based on the expected movement within a market. Binaries reflect delta. So if we go in and we back on up and just look at the daily view, implied volatility was really extremely high for quite a while. It's still in the high end on the average, as you can see right here over the past year. We're still in that high end, but it is looking like it's going to move on down. Usually it does move on down. And so what I want to do was actually go in and I wanted to look at a seasonality chart with you on the VIX. And let me pull that up. There we go. And this sort of gives you an idea of what happens. And I talked about this earlier. I talked about how usually about the middle of September we get a spike in implied volatility. And then what happens is by about the middle of October, that drops right into the end of the year. And every once in a while we can get a spike if there's something weird that happens. A little more abnormal. But, like we get some sort of, government shutdown looming or something of that sort. But as you can see, we did get our spike right here, middle of September. And I mean, you can go back and listen to Diagnostic Trading Hours from a month ago. And I was talking about this, about how, this is a cycle we're expecting. And so implied volatility, we're expecting it to do what? Well, over the next week or so, maybe 2 weeks, we expect it to drop considerably, okay? And that is going to change a lot of things. And you may see some strategies that may have had a really great record over the last month or two, okay? Be really careful if you follow signals, like just pure signal companies out there, because implied volatility is about to change. And higher IV makes it easier to take these trades, okay? So knowing that higher implied volatility makes it easier to take these trades, then you need to understand that when implied volatility drops, and you may have even seen, like maybe you were following some trading systems and all of a sudden you saw maybe the last few days they had a hard time. Well, that's because you have to completely adjust the strategy based on implied volatility when you're trading with options. You can't just do the same thing when implied volatility is 11 as it is when it's at 20 as it is when it's at 30 and 40. Okay, it won't work. It'll break down. So you may have a few good days in there, but overall, as it goes down lower, lower, and lower, you're going to see that options cost, basically pay less and less and less. And you really got to be on top of the ball to know how to respond to that. And that's why I'd point a lot of traders towards spreads, because it's a lot more effective. When that implied volatility goes down, those bid offers will often get wider. Demand goes down because the market's not moving as fast. And so market makers are having to widen bid offers in order to hedge themselves off. So, but again, understand that we do expect this to drop on down at least into December. And on the average, it goes down. It may have a little bit of a spike right there after Thanksgiving. But let's see. Let's check out. We can go in and we can check out the seasonality on this. And we can check out, well, what about over the last 5 years? What does it look like? And look what happens to implied volatility over the last 5 years. Okay? We get a run up right there, right around middle of December. September. And going into October, implied volatility drops. That's a 5-year average on what happens with implied volatility. It just goes down all the way right into the end of the year. If we go in, well, what about a longer average? Okay, well, that's 5 years, or we go a shorter average. It doesn't matter. So, we saw obviously one spike from that government shutdown that happened, but it gets smaller and smaller the further we go back. That gets more and more muted out, as you can see right there. And it just keeps heading down. So absent a government shutdown, we expect a complete drop in implied volatility going into the end of the year. How severe that is can vary, but if the markets do continue to rise, and now the one thing we have, what's the one big event we have between now and the end of the year that could impact, that could give us an IV jump, and that could be a Fed fund interest rate increase. So as the tension starts building towards the next Fed funds rate, then that could increase IV. If they come out and they don't change the Fed funds rate, then that will drop. Okay? And so that's probably the one major event we have that's on the radar that could, cause an increase in implied volatility. But overall, we usually don't see any kind of impact. And we just see it drop all the way into the year. That means miners are going to get much cheaper. That means they're going to be further away from 50 as they get further in the money or out of the money as a norm. And so either be ready to adjust to that, or you need to start diving into spreads, because you can trade those in any IV market. All right, stay right there. We'll be back right after this break. All righty, folks, welcome back here to the Diagnostic Trading Hour. And here's what we're checking out. We've been talking about the VIX and the seasonality of the VIX and how we expect the implied volatility to be dropping on the VIX going into the end of the year. So just be aware that should just keep going down, 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 down all the way. And like I said, it'll push prices a little bit further away from 50 when they get away from when the underlying market gets away from the strike. And so that will impact a lot of different strategies and systems that are out there. All right, so I want to cover that with you. And let's see. So that covers implied volatility, but it's not somebody's growing volume or some new program launch that makes bid offers wider. It literally is IV going down. You'll see it happen sometimes in the middle of the day, during lunch. You'll see it happen at night. Bid offer will get wider. Demand goes down. Implied volatility drops. It's just how it works, okay? Let's see here. So in higher volatility markets, obviously implied volatility increases. So this will push the binary closer to 50. That makes them move slower. If it's extremely high, the bid offer can get wide because they don't have as much time to react. If it's extremely slow, it can get wide because there's not as much volume coming through. So one side you have a lot of volume, but you have extreme movement, makes bid offers wider. The other side you have very little movement, but less volume, making bid offers wider. There's that happy medium, okay? that a lot of traders, they hop in on a system, it's working really well, it's usually in that happy medium, but then when it adjusts to one side or the other, that's when it can impact them. So it's not a popularity thing or a growth thing. It's just how implied volatility works in option pricing. So if somebody says otherwise, that's offering something and they're trying to explain it away. So we hear all these, explain away reasons, okay? Use a lot of caution. Use a lot of caution in following them or listening to them because they don't quite understand how those specific contracts work. Binary options are very much a statistical contract. I think they are a lot more difficult for most people to trade. When I hopped on Nadex, I traded spreads for 9 months before I touched my first binary. So I really think traders would be better off starting with spreads before they even get near binaries. But binaries, I make a lot on them. I do well pretty much on a daily basis. But it took me a long time to get there. And, trading is about survival. And I got a lot of stats in my favor. I know what I'm doing, and I've done it for a long time. So just be careful. I want you to, survive long enough to figure them out, okay? So make sure you listen to people who know what they're doing if they're trying to tell you how they work. So anyways, but it's understand that, binaries are they're a Black-Scholes model. They're nothing magical. It's not just a random number between 0 and 100. It's a delta of a call option. If we look at a Friday binary and we look at a Friday call, we look at the delta of that call, and they both have the same strike, like on ES, you're going to see that the delta is the same as the binary. I mean, you may have a little bit of a difference due to bid offer spread, but essentially it's the same price as the binary contract. It's just the delta of a call. That's the model. That's it. Okay. Let's see. I'm trying to just make sure you understand each one of these pieces. They go together. And, if you think that bid offers are really wide or this or that or whatever, just look at the spreads on Friday. So tomorrow or tonight after 6. And look at the bid offers on ES options. And you'll really see how good they really are. All right. You'll have a great day. And I will see you tomorrow morning on the Bull Bear Binary Option